Hello and welcome to Business and Banking Dialogue Show, your daily one-stop show for the best of best in topics of financial world and subject matter experts. We are live today across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. I'm your host, KK. Thank you for participating in today's show. As you know, we strive to get you new and topical subjects and new subject matter experts to get you an all-round perspective on all topic of interest in the financial world. Today's topic of discussion and speaker is new. Both are new. The speaker is new. The topic of discussion is new. It's a world of corporate banking. So we are talking about, we heard a lot on the retail side. Okay, now we are going to hear on the corporate banking side. So topic is digital transformation of corporate banking. Ladies and gentlemen, corporate banking plays a vital role in the industry's performance, accounting for approximately 1/3 of total revenues. However, the segment has come under pressure in recent years. Amid intensifying competition, which is of course there in every sector, technology, innovation, and weak performance in some markets. I think these are the last three are some of the things that are putting pressure on the corporate side. The traditional boundaries of investment and corporate banking is also being challenged by tech giants like Amazon and Alipay. You know, some of these tech giants are already offering financial services from trade finance to payments and marketplace lending. The implication of these changes is that the traditional boundaries between corporate banks and the industries they serve can no longer be taken for granted. In an ecosystem context, information, resources, and expertise have come together, which was exclusive for corporate banking, is now up for grabs. It is no more a defined marketplace that has always been there for investment banking. So to discuss about corporate banking, the disappearing of granted marketplace and its digital transformation, I have with me today new speaker, Mr. Ramesh Ganesan. Ladies and gentlemen, please join me in welcoming Mr. Ganesan to this show for the first time. Ladies and gentlemen, Ramesh is the head of technology, corporate, and global market operations in IndusInd Bank. Mr. Ganesan has over 35 years of experience in transaction banking, corporate operations, digital banking, and financial institutions. Prior to IndusInd Bank, he was the executive director and head of transaction banking in India for ABN AMRO Bank. I have worked in ABN, and I am fortunate to have met Ramesh when I was there. And I'm meeting him today after almost 20 years. Ramesh, good to connect with you again.
Same here, KK.
Thank you. So Ramesh, good afternoon and welcome to the Business and Banking Dialogue. Ramesh, digital disruption, which began reshaping the retail bank years ago, you know, we've been seeing that, right, has finally come to corporate banking with a vengeance. Okay, retail banking sectors have made bold and aggressive moves in digitization, resources, robotics, use of AI and analytics. However, the corporate banking for some time has not embraced digital with that same kind of fervor. Why have corporate banks delayed embracing the digital wave?
Thanks for the introduction, KK. You're absolutely right. Corporate bank have not been as fast as the retail banking in terms of adoption of the digital sort of a world that has emerged in the last say about a decade or so. The reasons are very, very typical and very much in every single bank that you can see, is that it's all because of the legacy systems, largely to do with a lot of legacy systems which are there, and to change that, to give an offering to that always takes a long time. There's always a lead time for a replacement of the systems and others in order to offer these things. Generally, the banks, the bankers, the corporate bankers have a lending relationships a lot, and these lending relationships are very strong, and they never faced for years a fear that they will lose their clients, and that is one of the major reasons for a little bit of complacency that may have existed over a decade back, and the slowness of the entire digitization that takes place here. The other important reason I would attribute to this corporate is the fact that the corporates were also a little bit slow in trying to adopt this, from the standpoint of the fact that a corporate, the risks are far higher. While on a retail type, you could take a call of sending a small payment of a 5,000 rupees or 10,000 rupees. When it comes to the corporate, it's a question of a call of a few lakhs or a few crores of rupees, and one has to be extremely sure of the ability of doing everything on a digitized manner. This also was sort of I would say a little bit of a resistance in the corporate to go into a digital world. And also the fact that corporates usually have a plethora of relationship. It's not a single product relationship that a retail payments would offer. For example, if you want to make a retail payment, it would be say about a simple UPI or IMPS sort of a payment. But when it comes to a corporate, it's a big relationships, and the relationships spread over multiple products. And when that happens, what really the bankers have a huge lot of linkages to these things, and there are multiple integrations to the systems that exist. So when we have to, when one has to migrate from these systems to newer systems within the banking, it takes a long time for the bankers to actually integrate these multiple systems into this. And this could be one of the reasons for the delay in adopting these the newer technologies and also replacing their existing legacy systems, which could have brought in a faster sort of a digitization in this world.
Okay, so we do see a change now, do we?
Yeah, of course.
Yeah.
Of course, yeah. There is a complete change in the last 4 or 5 years. I mean, I would say the last 5 years, the entire corporate banking has completely undergone the change, largely because of a push that has come from the retail side of the banking. That's one of the things, and also the development of the payment stacks and other things, which has enabled the corporates to take advantage of it. And more particularly, what has happened is, increasingly we find that there are two important parts to this. There are large corporates, there are mid markets, and then there are small businesses. And the small family businesses have been driving this because the users are used to a particular retail experience when it comes to payments and when it comes to handling an app-based sort of a banking as compared to that. And they would want to have in their own partnership or a proprietorship the same experience which is there, or convenience and the faster payments and solutions that they want. So adoption of these were far more in the lower segment of the corporates than in the higher segments, which was more worried about security and other aspects of it. So that was one of the reasons why you find that currently it started moving from the lower end of the corporates to the higher end.
Yes, thank you. Thank you, Ramesh. I think well put.
Let me also add what was it. There was a big difference actually, and in terms of the multinationals, what used to happen is that multinationals were very fast in trying to integrate. They had ERP systems, and say though they are the banks who would normally in a corporate bank would sort of integrate in through their ERPs or through certain secured mode of communications that exists with them. So the larger chunk of the mid market and the large sort of corporates were the ones who sort of were left behind in this race initially, and now in the last 5 years, I'm seeing that much more.
Excellent. Yeah, it's good. So ladies and gentlemen, I think Ramesh has given us a perspective. Banking, just for people who are getting who are the basics of banking, is that we have a retail, we have the corporate, two big sides. There are many others, but generally these are the two sectors that are there, and they work in pretty much silos. though with technology they have come together. So like Ramesh pointed out, I think the big reasons why transformations have not happened is the old legacy system, replacing them. And I think the big tickets is what is, it's a big risk. Small in retail, you have small tickets. You can take a risk. Okay, if it fails or it gets lost, no problems. You can always compensate because it's a small money. But in investment banking, it's a risk that you have to take because the tickets are massive. They're very, very big. If you have a problem, you could have the bank running a loss if the tickets are, somehow something goes wrong into it. Great. Thank you, Ramesh, for giving us that perspective. So before we deep dive into digital transformation of corporate banks, can you tell us what are the key issues that have rocked the corporate banks and forced them to look beyond, some amount of tactical optimization?
Well, it's all the fintechs that have changed the way of life today in the digital world, and that I would say is the competition. Basically, it's a competition that is being offered, that has come about by two important things for the corporate banks. It used to be that there was no competition at all except between the banks. And there it was largely to do with the amount quantum of underwriting that one could do, and that was the way the banking used to be. But now in this new world, the fintechs have played an extremely important role in trying to really increase up the competition, and they are today targeting all the attractive pieces in the entire opportunity space that exists. All of that, and they're quick into it. They don't have the baggage of the legacy that the banks go through. They don't have that level of sort of regulatory sort of scrutiny that would be there, and that made them very, very quick enough in trying to offer solutions and eating into the pie of what traditionally the bankers. And this, in my opinion, was one of the biggest an area why you find that the bankers slowly started quickly had to start off with the digitizations. The other one is also the fact that in the last couple of years, if you really look at it, at least from 2018, I would say definitely, is that the corporate bank faced a lot of headwinds. And because of which the banks have to look at more cost optimizations and solutions on that, and this was the only way. I mean, in that sense, to reduce cost, this would be one of the best and easiest ways to do the digitizations and digital transformations. So when I say this digital transformation, I would rather classify it into sort of three areas. One is the client-facing part, which is there, which is what really drives some of the customer behaviors and other things. The other one is the middle layer, and then the back-end part. What I mentioned about the cost optimization is more to do with how we actually process the payments, process items, and those are the areas where one could actually bring in a lot of cost optimization by doing a lot of digitizations and other things. Other is there is because of the setting in of these competition. What was happening is that there were new modes or new models of client acquisition which was happening, and sort of retention of customers and all. And then these would necessarily, one had to move into a digital mode of acquiring to reach out the mass areas, to cover the various geographies, and therefore the operating model actually was completely changing. And these are the things which largely drove the banks into providing the solutions.
Okay. So when we talk about just to compare a little bit, some of the game-changing transformations happened in the payment side. In the retail, the UPI, the Bharat, payment stack, and these kind of have kind of revolutionized the retail operations. Whereas if you look at corporate, I think they have more or less remained the same. Like you still have the Bloomberg and the Reuters, and there is, and Swift perhaps. And so there has not been a major disruptive payment system. Has it come, if I'm not mistaken?
No, it doesn't require, because all of this that is there, disruptions which have happened, are all used by the corporates also. I mean, whether it is an NEFT or RTBI, it's only the mode of delivery that really changes. So
Yeah.
there is no need for a disruptive thing happening, because in that sense, the products that were available for the retail bank, I mean, they would be available for it, except for the fact that IMPS would not be used, because it's for the small value that it is. But that way the corporates could, whether it is BBPS is another one which the corporates use for all their bill payments. So it's now, some of these are used by both the corporates and so some of these payment stacks are actually common for both.
Okay. Yeah, that's good to know. So let's, while we'll talk about the global environment a little later, let's look at the Indian corporate, the local side of it. The Indian corporate banking market, I think it presents a lot of opportunities. From a technology perspective, what are the implications for Indian banks to win in this market?
Yeah, actually, rightly said just now that payment stack that has been created initially with the vision of RBI, and then subsequently by what NPCI has done in some of these, like the UPIs, the APS, and all, is sort of opening up a huge opportunity space for the corporates and corporate banks. The other one, which I would say is very, very important, is that the world is moving towards open banking and neo banking, you would say. And there are banks coming up completely tailored around this, and their model is completely an open banking way. And that brings about a sort of partnership with the fintechs, and that's changing the space of the way the Indian banks is operating. So today there quite a lot of partnerships have been entered into, where it's not that it's a win-win for both, I would say, where there is reach and acquisitions brought in by the fintechs and others and all, and while the bank provides the solutions and delivers the product. Now here as well, it is not possible for all the fintechs and others with whom one partners can actually provide all the solutions, because banks are there to provide universal solutions. So the corporate bank provides the universal solutions, and it's impossible for anybody else to come in to actually give such a universal solution of so many products all in one place. So there's always opportunities to partner with the local with many of the fintechs who have very niche offerings in each of these areas, and who specialize in that. And these are and also some of them actually work on the technology space as well. So you have various fintechs working in the blockchain area. So one would partner with these blockchains and provide a huge opportunity for a corporate bank to actually increase the business.
Yeah. Right. Thank you so much. So, ladies and gentlemen, I continue to have discussion with Ramesh. And meanwhile, I would request you to, if you have any questions, please put in the Q&A box or the chat box, and I will try to get across to Ramesh with those kind of questions to get an answer for you. If you want to talk to Ramesh and pose a question directly to him or make an observation, you're most welcome to do that. You could raise your hand, and the digital team will try to get you across and to talk to our guest today. So we talked about, you did touch about universal solutions. You talked about fintechs and all. So we have had subject matter experts come in this on this show for. And there is this kind of problem, or may not be a problem. It's the way we look at it. Is that some of these fintechs want to own the customer, because they are the first touch points, and they say that the banks are basically a back office kind of work. So is there a danger that you will lose customer which has been your, that's been the kind of a property which the banks have been owning? So you see that kind of a danger coming with more and more fintechs coming to the forefront?
No, can I just clarify? Is it what you're talking about is danger of losing a customer entirely, or is it on a partnership basis, or are you saying with the competition from the fintech?
From a competition from the fintech, because the fintech has got everything. Okay,
Yeah.
he has got, like you said, universal solutions. Fintechs are offering a lot of solutions, and they say that they happen to be the front end. So why should I give you my customer to you?
Yeah, well, you're absolutely right. But that's exactly where the models are evolving. In fact, if I see globally as well, these models are very well evolving. There are some who could some of them who initially would feel that why I don't want to partner with these fintechs and would want to sort of protect my base. But if you look at what the success story has been all over the globe, and as well as in India, is that the partnership makes a better sense because it's a win-win for both, and it is not possible for the fintechs today, given the type of investments that they are into, or the products they are into, or the geographies they are into, in order to provide entire solution for the needs. So obviously it's a win-win for both to come together to offer the type of solutions. Secondly, is that the banks take advantage of the fact that they are extremely fleet-footed and they are far more quicker to the market, quicker in making the necessary sort of product features that really would sell in the market. And these are things which normally, as a traditional bank, would take a little bit longer time to roll it out. And so it makes greater sense actually to partner with a lot of fintechs. And personally as well, I've seen in my bank as well, we have partnered with several fintechs, and I've been greatly successful in each of these models that we have partnered.
Excellent. Yes, that's wonderful. Good to hear that, Ramesh.
Because just to give you that, there are a lot of areas where the fintechs could bring in a technological piece or a reach or the client acquisitions piece. But when it comes to the delivery part of it, when it comes to the regulatory part of it, when it comes to the effective sort of ability to give a complete end-to-end solution, it would not be possible unless the fintechs partner. So when you look at it from the fintech side as well, the first partner that they really would like to knock and sort of bring in is a bank, and that's what I've seen in every single sort of offshoot.
Yes, that's true. That's great. So, Ramesh, what are the corporate banking functions which banks should focus to deliver the promises of digital transformation? Basically, they improved customer experience, use of UI, UX, operational efficiencies, and business model and innovation. So, what are the corporate banking functions which need to focus on all these?
I think one of the things is basically the relationship management. If you really look at it, so what is the biggest focus for a bank is to have a good client acquisition, on relationship client acquisition, and their Salesforce enablement, I would say, in trying to reach out. So you need a lot of information, and you need to arm your Salesforce with a lot of information before they actually speak to the client or while they speak to the client. So you need to offer solutions which are very unique to a particular industry. If you're going to meet someone from the, say, steel industry, one needs to know that what exactly is happening in that, who are the people whom this particular corporate is working with, or a business is or the sales force. With these type of a sort of 360-degree view, it will be a big win, because you will add a substantial value to the clients, and therefore that will bring in the business to the banks. This also happens with also providing a sort of 360-degree view to the RM in sort of giving every single information of what that corporate is doing. So typically what happens is when an RM goes and meets a corporate, he has a few things in his mind. He wants to get some additional business. Now, there is a science to getting that business. There is a relationship part of it to get the business, and there's also science to getting that business. Because one needs to know exactly where exactly is the wallet share. What are the products which one needs to cross sell? What one need to do? It's not typically like a retail that you would normally know what an individual would want. You would want a housing loan or a personal loan or a credit card or something like that. But here is a case where it is the requirements of corporates are pretty unique in every case. And this information is not so easily can't be sort of known to an RM who is meeting several clients during a day. So it's a great big enabler for a corporate banker, I would say, if he is armed with this type of information, particularly knowing a little bit of what's happening in the industry, what's really the global trend, and which also enables him to speak and becomes talking points with the corporates. This is one area which I would think is one very big sort of a big with the digital transformation things. And the reason is that it's the information that is provided or you arm your relationship manager is not just about what the bank from internal sources is providing. Today, the digital world outside from the ecosystem offers a substantial information that can be available. So, but that needs to be given in a clarified form. I mean, it should be given in a very clarified form, like a butter, I would say. So, it needs to be given so that it's immediately sort of can be translated into a discussion and business. So this is one area which I would think is one which is very, very important. The other one which I would say is also about trade. Trade finance also offers a lot of opportunities, because there the information about how much of it is exporting, how much is importing, or how much is his transactions to what are the sectors he's working on, and all of that information is a big winner in my opinion. That's something which could be a substantial sort of a gain. Apart from that, understanding his entire business as a whole and understanding his pain points and to know that all of this actually I would say largely would come in knowing digitally if he's enabled, it will be a very useful thing to do. Another area which I can think of, in my opinion, is the early warning systems. The corporate bankers, now that having given the loans, having got his wallet share, having got his sort of flow accounts into the bank, the next thing he has in his mind is that whether there is anything that I need to know, what are the red signals in whatever he has given. And this is where I would say that early warning systems come in play. In fact, now it's become even more regulatorily requirement to do that, to have these type of systems, which can only happen with a digital push internally. So where you can identify through his flows, through his repayments, through his looking at his stock statements, through his transactions, and also about his transactions with others as well. So all of this can be all got it together. So these are areas which in my opinion provides the biggest opportunity for a
Great. I think Ramesh, you brought out three very important things that corporate banking functions which focus on bring value to the clients. I think that's a very important thing. Getting your RM to have a 360-degree view of the customer. You said science. It's to get the business right. So one is to know, but to get a business is also a sign. Very good. Trade finance, I thought, is also a very important function, and most importantly, early warning signs. So many NPAs and mounting that we better have these kind of systems so that you don't have those NPAs mounting all over again. So thanks, Ramesh. We now, we are past the half an hour since we started talking. I mean, like I say, time flies out here. Very soon, it'll be like, okay. There's always more and more things to ask and more things to learn from you. But we have participants who want to ask question either on a chat box or they can ask directly. So I have the first caller, and he is Prabhakar Kaza. Prabhakar Kaza is ex-CEO of State Bank of India, London. So good morning to you, Prabhakar. Can you
good morning.
Could you please, you already unmuted. You can ask the question directly to Ramesh. Ramesh, you have a choice to answer or not.
Sure, of course. Sure.
Hi, Ramesh. Good talk.
Hi, Prabhakar. I just can't believe it. This is
I know.
like I'm speaking to you, another person. Today I have two persons to whom I'm speaking.
I know. We met long ago.
20 years. I can't believe this, Prabhakar. Absolutely, I can't believe this. And I'm just speaking to you, and I didn't know you are one of those who would log in. I mean, amazing.
We should thank EPS for it.
Yeah, absolutely. And KK and EPS both, KK also is another one who I met, whom I'm speaking to him after 20 years today.
Yeah, going back to my days in computerization in State Bank, we used to use very backward back office computerization. But the first time State Bank was willing to spend a lot of money was one of our larger customers said that, other banks, Citibank and all that, they're offering a remote terminal. And if you guys don't offer, I'm going to shift all my accounts. Actually, State Bank of India couldn't lose its patronage. Spent a few lakhs on giving the first remote terminal to a corporate customer, the only one that we had in those days. That was way back about 35 years back. So from there onwards, I realized one thing, that it's not the smaller guy, the retail customer, or the individual who actually drives computerization in banks. It's the big customers. When I came from India to UK, the first thing I heard was direct debits. There were no direct debits in India in 2002. So one had to understand that direct debits is a big requirement of customers here. Then come a lot of other things like trade finance. In India, you remember, we should take a whole bunch of documents and send it to the customer by post. And the fellow would send you back after 1 week. Then we found that here it's all done by scanning. Same thing with scan checks. Take any number of innovations that have come about. It's all because banks want to spend billions and billions. HSBC, for example, spends more than $1 billion per year, billion dollars per year on computerization, on IT. It's a corporate customer who drives the banks into setting themselves right so that he doesn't have to have huge departments for banking, for reconciliation, things like this. My thoughts. Thank you very much. Nice meeting you after a long time.
Very good. Thank you very much. And it's absolutely right, actually. The entire digitization is driven by the customers who actually can drive it, or it is the technology which drives it, or it is the management which drives it. So actually, and all the three, when they are congruent, is when you have a successful solutions that really come about. So there could be some where the banks are sort of driven, as Prabhakar said, it's driven by the corporate needs.
Yeah.
Thank you.
Okay. We have another question that's coming your way, Ramesh. I mean, this is as you know, sir. This dialogue is all about getting our participants up the curve and make them understand during this COVID period. So, from the line that we adopt of, there could be some deviations here and there, but I think you can handle that very well. The second question that is coming to you directly is from very experienced banker, Harish Prabhu. Harish, unmute and ask the question.
Hi, Ramesh. Good afternoon to you.
Hi, good afternoon,
Hi.
Harish.
Yeah, hi. Corporate banking by its nature, has to have a robust dynamic monitoring mechanism, right? I mean, because it's a risk that it's a risk asset. And given the legacy systems which house the ledger, the risk metrics, etc., monitoring, I believe, is always done in hindsight, and it continues to be so, I presume. Now that India stack and a whole lot of things are dynamic, RTGS, NEFT, and a whole lot of have the banks moved on to actually see the movement in accounts, both overdraft, cash credit, etc., on a dynamic basis? And which would be phenomenal for an account manager or a relationship manager to sort of have it on a dynamic basis.
Yes, exactly. I mean, that's the change that has been brought about currently, Harish. And today, it's absolutely like instantaneous that for any of the relationship managers would actually come to know about all of these movements. So if there is a change in the balance or some amount of been flown out, he comes to know that immediately, and that's the enablement that the digitization provides to the RM.
Also, do they also are they able to map the end use, whether it's being the end use is being used for the right purpose or not, diversion of funds?
Well, that part of it is a little bit of a challenge because you wouldn't know what for anybody is saying, and that leg of it is not complete in that sense.
Sure.
Because you would just know that he has actually made this payment to say some ABC, but he doesn't know whether that ABC is really a business one or is a diversion of funds or something like that. So therefore, when you look at early warning systems and all, which actually captures all of this, there is multiple sort of data points which are picked up, and then you arrive at a score saying that okay, this is getting negative or this is okay. So these type of things can't be done on one single sort of an transaction or an event. But definitely, if it is a substantial value, there's always a reason to always call and get a cross-check. But the enablement of somebody to know that is what is today available in the hands of the RM.
Fine. And KK, if you permit me, just one indulgence is that when do you see adoption of blockchain in banking, and which processes will adopt blockchain first? Treasury or whatever?
Very good question, actually. In India, about 100 blockchain startups are already currently running. And quite a lot of them are already there. And second thing is that the IDPRT also has developed a blockchain, is also developing a blockchain platform, and also some banks have gone together. In fact, our own bank has also joined together with in a consortium in order to develop something like that with the other banks. So this adoption is really currently taking place, and there are quite a lot of opportunity areas where blockchain is very much where. See, if you really look at it, initially it was a little bit of euphoria about blockchain 3 years back, and all of us did it, and even we did it. We did bilateral sort of blockchain with counterparties, and we do a lot of cross-border. We are among probably. We do a lot among the largest cross-border payments on blockchain we handle. Having said that, and that is in partnership with Ripple actually. So, but that type of bilateral really doesn't exploit what a blockchain offers. The benefits of blockchain can only come in when the entire ecosystem adopts it. And in order for an ecosystem to adopt that type of a blockchain, we need sometimes a government push or something. I can give one major example where blockchain adoption could be a big value is in trade. Because in a trade, what happens? There are at least about 20 constituents in a particular trade transaction. It could be an importer, it could be a shipper, it could be a transporter, it could be a CHA agent, it could be the customs. On the other side, a similar leg of customs, CHA agents, the shipper, the transporter, then the banker, the bankers on both sides are involved, and the clients are involved. Apart from that, there are financiers who are involved. Apart from that, there are others who are involved in the documents and other things. So there are multiplicity of players, and this is where actually the golden source of we need that confirmation of that golden source which a distributor ledger offers you. And the adoption of this technology in for example in trade finance or something is amazing. I mean, it would be greatly useful for the entire community on it. Unfortunately, what happens is that can't be done by any individual bank or individual entity or something like that. So it needs adoption from several stakeholders, for which there has to be some enablers, and several sort of entities have to come together to create that. And that's exactly what I would say some initial work is being done on that for this to happen.
Sure.
Thank you.
Thank you very much.
Thank you.
Ramesh.
Thank you, Harish. Thank you. A good question. Ramesh, you talked about, the 360-degree view of customers, getting the relationship manager armed with information about a customer before you even prospects. So basically, we're talking about advanced analytics, where that is an integral component of digital transformation. How are banks using advanced analytics to disrupt the traditional operating models for top-line impact?
Yeah, it's a very important question. Some of it I tried to, I would have sort of covered in trying to talk about an early warning system. That's where this comes in. But if you really look at it, the analytics come into play is on identification of for customer acquisition. And that's a huge sort of an area, because if you want to focus your efforts on the right clients, right sort of thing, and this analytics play a big role in this area of trying to enable identification. Whether I must get into this industry, these are the players, these are the ways it needs to. Traditionally, it used to be done by way of Excel sheets and other things and all. Now, on the fly, you come to know quite a lot of these happenings, and that will be a very useful thing. Other areas where analytics play a big role is sort of an innovative pricing model. So on the fly, if I can give him an offer, saying that I'm ready to give this type of a pricing for this particular transactions on this, that enables you to actually bag a particular business or whatever it is. So that is one big area in analytics, which analytics enable you. And if that can be completely straight away provided to a person who is taking that decision on a pricing model or something, because all of this would relate to quite a lot of capital that the bank employs on any of these, and also the return on risk which the bank wants to do. Normally, this would not be easily done by a traditional banking. Years back, this would be a sort of something which the bank would it'll be some range which will be given to an RM, and then he would be giving that. This is something. The other one is I would say is of course the early warning, which I said. But on the front today, what is really happening is the customers. It is expected that when you go to the client, you need to know to what extent you could take a risk, and that quantification of of what could be the risk that one could take, and what your risk department would be comfortable underwriting, is something which will be a big benefit if the clients if that can be done on the fly and on a meeting. Just like in a retail lending, you are either given a loan or a quantified loan, or just as you fill in certain details, you are immediately given a loan for a particular amount within 5 minutes or 10 minutes time. So this type of a thing may not happen in 5 minutes time, but if one can understand what could be the risk appetite of a bank in this, it will be very useful. So these are areas where analytics play an important role and enables us to take quick decisions and to be more interactive with the client.
Okay. Thanks, Ramesh. Also, there are this widespread talks about transformative potential of the API banking. Okay, so the API banking, blockchain. You talked about blockchain now.
That's right.
In corporate banking. Can you tell us the subdomains in corporate banking which can be reinvented using the power of API banking or blockchain?
Yeah, if I look at how this has happened, when API banking came in, one is that when the open banking came in, I would say that India is pretty much way ahead of it. The adoption from the corporate side, and as Prabhakar did point out, that some of the corporates have led it. there were, just as banks were getting into it and trying to provide, the corporates immediately started adopting the APIs, and that enabled banks also to implement APIs quickly and give them. So initial developments of these API banking was more like directly, connecting the corporates to the banking systems and to enable for those sort of journeys or those requirements which are very, very specific to the particular corporate were being given. But soon the banks realized that this is just the beginning, and then we started creating some standard stacks, API stacks for it to be offered. And like ours created certain sandbox for others to sort of adopt. So this brought about opportunities to grow. And over a period of time, I would say this is pretty much maturing, with banks now sort of having a middle layer from where they actually would sort of publish their APIs, which are easily consumable and makes it very convenient for the corporates to immediately connect and adopt it. In doing so, some areas which I can see, which we have also from my experience, is that on the identity layer is something which I see a substantial sort of APIs which are there, particularly in terms of digital authentication, digital signatures, and identity and other things. Otherwise, typically on the payment layer is where API bankings have been traditionally the first ones which really came in, were on the payment layer of the APIs, which is like any of the payment stacks that you see from NEFT, from NPCI and all. Then of course the data empowerment and the framework that could be there on what the financial services provide for fintech players and all who are there. But more importantly is some changes which are happening, and particularly where the government is also focused on is going to come in, is that recently this iSpirit body which has come about, sort of providing the digital credit to the millions of MSMEs, which is what is taking place in the country. And this network, it operates on the UPI and will sort of envisage a sort of third-party payment ecosystem, and will become a platform for access to the disbursement of credit in these MSME areas. So this is also something which is happening in a very big way. So these are areas which, in my opinion, and UPI, of course, not to mention, is going to be one of the largest in terms of PUs and payment mode. So these are the areas, in my opinion, API bankings will go in a big way.
Yeah. Thank you. Ladies and gentlemen, I request you to kind of, we have just about another 10 minutes to go. So kind of please put in your questions as early as possible, and please stick to the topic of discussion. Like, I have a question which has come from an anonymous attendee. He talks about financing of large debt to a consortium finance, which he says will lead to NPA. Surely it's a very good question, but I think the topic is different. Today we are talking about corporate banking and digital transformation. So ladies and gentlemen, please stick to the topic that we are talking about. Your questions are most welcome, but should be related to the topic we are talking about. So let me ask another question that has come from an anonymous attendee. Whenever you would like to give access to systems of the corporate to the bank's systems to get real-time information service, there is a cyber security risk. So we are talking about cyber security, which is bound to come. How well are banks protecting themselves against this? And when the corporates, through desirers of access, may not have appropriate security risk protection. So I think the question is, how are banks, typically the corporate banking side, we stick to that. How are we protecting ourselves against cyber security risk?
So the banks wouldn't offer, because we have to the trust that anybody has on the money or the information that the bankers have needs to be protected, and that's one of the primary sort of security that the banks have traditionally done it, whether it is manual or it is this. And therefore this also translates to the digital world, and particularly because there is increasing threat from the cyber world. Obviously, the banks do a lot of things. For example, in our bank, there is absolute robust oversight especially around the access or to data and the server functions, that are there through, we have privileged user IDs and that come in. We use and we educate everybody, particularly the phishing mails that the clients and corporates get it. We sort of educate them in terms of the fact that they shouldn't do anything by clicking any of those and to compromise any of the security features. So the security infrastructure, especially around the critical platforms, so particularly the channels, the client-facing platforms, the SWIFT, the ATM switch, and all these things have a huge oversight internally, and it is completely monitored 24/7 in terms of. Apart from that, the digital security uses a multi-factor framework of customer transaction. Of course, RBI years back and way ahead of anybody in the world adopted a two-factor authentication. But that's not what today would be the real end thing. What we have done, I can give you one very good example of what we have done. What we have done is an adaptive authentication. So we see the customer behavior and give an increased or additional authentication requirements depending upon the type of transactions or the from it comes in. So if I were to give you an example of what I mean is adaptive authentication, is the fact that if I know he always logs in from Mumbai and he doesn't and suddenly I find there is a login that is coming from, say, from a remote location and say maybe in Africa or somewhere, then in that case, instantly I will ask for additional authentication requirements, and that depends upon the risk score that would come in from that type of a scenario. If I know that the person is actually traveling, say, always, and he has two offices between London and Mumbai, and I know it's coming from London and Mumbai, then these two will become a sort of an enabler. So there's a little bit of rules that are set. There's a little bit of AI learning in these adaptive authentications. So the systems have the ability to learn these type of things and adopt it accordingly. Accordingly, there'll be a step-up authentication that is required for the various scenarios that we actually monitor. So this is just an example of it. Similarly, for amounts, suppose I have not seen a particular corporate sort of give a payment at a particular time, then there will be an increased thing. Similarly, maybe at night time, I mean, if I know that he doesn't come in at, say, at 2 a.m. in the night, I find that there is a debit that is coming in. There would be an increased authentication sort, and only after that is cleared will the payment take place. So these are some ways where the banks protect the interest of the clients, which is absolutely foremost. And lot of efforts, time, and sort of investment also goes in trying to protect it.
Yeah. Thank you. Thank you.
Comprehensively responded to this.
Yes, I think so. I think you've done it well, Ramesh. Thank you very much. So we talked about the disruptions that are caused by the entry of fintechs, big techs or bank techs and trade tech and many of those kind of techs that have come in, and they all have created a kind of a lot of disruptions. And and typically, if you look at the retail, because of these disruption, many of the products have got pretty commoditized. Okay, so what about corporate banking? Can you tell us how various corporate banks are dealing with these kind of challenges, and are corporate banking products also getting commoditized?
Well, yes, eventually it does, and there is everything get commoditized. Honestly speaking, but the key is for innovation. I mean, innovations will get commoditized over a period of time, but the key is to keep on innovating, and that's again where the digitization helps you in trying to innovate products which are normally not possible through the other modes. So what we see is that the key is to partner with, as I mentioned to you, with the fintechs, and there are areas of focus which actually enable us. The largest one is the digital account opening, which in my opinion becomes one of the biggest areas of sort of partnerships. with the fintechs. The other one could be payments. Then lending. Lending, of course, is a big one. The fraud risk management is another area of a collaboration that we do, and also then also the personal financial management which we do, but that's outside the scope of corporate banking. So these are and international remittances, of course. So these are areas of sort of where the disruptions are taking place from the fintech area, but we also sort of partner and try to be a win-win for all.
Okay. So you said that there's a lot of collaborations with fintech companies, but a lot of these fintech companies, and this is a YouTuber asking, a lot of fintech companies are small startups. How can banks or what is the attitude of banks in adopting these smaller fintech who are nimble, who can do things for you with aggressive technology, but they are small timers? Is there a problem for them?
I agree with you. This is something which is a big challenge. So we always find that and they lack capital for growth and other things and all. But there is something unique which I want to adopt and I want to win. So it's a question of how you ring fence yourself from that type of sort of issue of what could happen to a very small and thing. But that's exactly the assessment that you need to make. Thousands and thousands of fintechs are there. We don't partner with thousands of them. We make the sort of selection from that as to who would be of use and their depth of understanding of this and their ability to also sort of they cover the areas which we would want them to do. And that is something which we want to scale up. Particularly, it's a question of scaling up, which is the key to the success. And and the partnership should be a win-win for both. So when we see all of these, would we actually go in for a partnership?
Okay, thank you, Ramesh. You have been you have been leading the digital transformation in your organization. So tell us about how you have helped the bank embark on their digital transformation journey and some key milestones that you have crossed, so that it could be useful for many other bankers who are in this call.
Well, I can talk about something which we currently did and something like for example, a video KYC platform. Yeah. I mean, this is something which I can tell you is pretty new that we got launched. So we have so this is something it's not unique to a particular product journey or a particular business segment, and this is available across the bank. So any of our systems and others could connect onto it, and instantaneously one could complete their video KYC. And that's something is a big enabler because that reduces the lead time to opening of an account. That's I can or whether it is an online deposit creation from various platforms depending upon their needs and requirements. The other one is that if you look at now the COVID times, and I can give you one of them in the COVID time, is that we had an issue that all of a sudden a lockdown was announced, and we had to create an enabler for in our technology space to enable them to work from home, and we could actually give 8,000 users in the bank an enablement to work from home almost within 2 weeks' time. So since bank is on essential services here, and we needed to provide our services, we had absolutely no disruption in services, and this was an enablement which was possible because we had all that was required to give them that type of ability to work from home, particularly with necessary cyber controls that are necessary because it's bank systems which are being accessed remotely, and which we had never really envisaged before it all of a sudden came in. So this is another area. Other thing is that we have, as I was talking to you on the Salesforce enablement, we have a CRM which has been implemented in the recent times, which today the adoption of that is like almost 20,000 users use it today. Yeah.
Okay.
So this type of an enablement is another of the technological ability the bank has able to provide.
Excellent. Very good. So, Ramesh, we are at the end of the hour, but if you are okay, can we stretch it through about a couple of minutes?
Oh, well, maybe one more question we could take or so.
Okay, sure. So there's a question that is, Krishna would like to ask a question. Krishna, are you ready with the question? Okay. Another question has come to you, Ramesh. Talks about particular concern for corporate banking executives is that they have operated over recent years in what he calls as Goldilocks macroeconomic environment. Either it's too hot, neither it is too hot nor too cold, generally the corporate kind of things, and aided by almost limitless cheap money from the central banks. Of course, this is unlikely to last. The financial cycle will change and bring them all under pressure. Your thoughts? Is there something that you could?
It's never we are never in this world. We are always under the pressure, and and life has not been so nice. As I mentioned to you, it's been quite a lot of headwinds in the last couple of years, and for various reasons, because you are seeing globally also. Globally, there has been a downturn and economic downturn, and even in India, even prior to COVID, also there has been a sort of slowness in the economic growth, and therefore it's always bankers, and particularly corporate bankers, have been tremendous. The fees are always under pressure, the revenues are always under pressure, and we need to be extra watchful about our assets and the quality of the assets. So this has been almost there, almost sort of now it's become part and parcel of it in the last couple of years, I would say, and more so after COVID.
Okay. Ramesh, can we take one question from the media? You're okay?
Okay.
Yeah. Krishna Tripathi from ETV Bharat. Can you please unmute and ask one question only, please, because he's running out of time.
Mr. Ganesan, just wanted to know what about the attacks on banking system, because with the work from home, the attacks have gone up. What is your experience? Whether there is anything new? What is the percentage of increase and how to tackle them?
Oh, well, not at all, because in our case, we don't allow them to access from any of these unless all the security controls are in place, and we don't find any of those at all from in our systems at all. We continuously monitor it. There are always suspicions which are coming and which are being tracked and blocked, and it is not that we have not seen some of them. But the action is instant and immediate. Actions are taken, and we immediately block any of those suspicious sort of any attacks that could come in. So these are things. Plus, there is a lot of education also continuously provided to the users, and touch wood, I would say that we do not have any of those because we have all the securities that are necessary. All the firewall securities that are necessary for this, because it's a question of the client's information, client's data, and client's money. And so access to our bank systems are provided on laptops which are configured, especially with these security features only to them. So I would say we have been, touchwood, things have been pretty good for us.
Whether Mr. Ganesan, the number of attacks or attempts have gone up during the lockdown period? Did you see any surge?
Definitely, in terms of that, there would be. I'm not able to share with you the exact statistics on this, but definitely yes.
Yes, there is. I think I read somewhere it's about 126%. Thank you, to Mr. Tripathi, for asking this question. So, ladies and gentlemen, we come to the end of today's session. I mean, like I said yesterday, time flies, and when you have a good speaker like Ramesh, time that has perhaps is faster than Rafale. So just to summarize, may I say that the key to success in corporate banking lies in banks defining clear areas of expertise and focus, like Ramesh said, in customer relationship and product expertise, as well as collaborating with tech service providers rather than trying to do all things to all people. Only this way banks, and not only banking, will remain in demand. Ramesh, wonderful talking to you. I mean, we covered a whole repertoire of topics and subtopics. I'm sure the participants liked it, but as usual, we are 1 hour is just not enough for all these. So we would would request you to come again for some other time and in some other place. So before before we say goodbye to Ramesh, participants, please know tomorrow is ex-CEO of Standard Chart, Jaspal Bindra. Topic: steering NBFCs through choppy waters. You can see that on your screen right now. So look forward to having another fruitful discussion with Jaspal. Ramesh, once again, thank you so much for spending time with us. Wonderful talking to you and wonderful reconnecting with you after so many years. Ramesh, look forward to seeing you in some other show. Thank you.
Thank you so much, KK. It was a real pleasure to be here interacting with you, and thanks to EPS as well. Thank you. Thanks a lot.
Thank you very much. Bye-bye.
Bye-bye.